today to talk about a great staff recruitment and retention tool for Connecticut employers. It's the Employer Student Loan Repayment Program being offered by CHESLA in conjunction with our partner RISLA. Before we get started, I'd like to kick things off with introductions. I'm Jeanette Weldon, Executive Director of CHESLA, and I'm joined today by Josh, Suzanne, and Tom. Josh, do you want to start by introducing yourself?
Yes, thanks, Jeanette. My name is Josh Hurlock. I'm the Assistant Director for CHESLA, and now I'll turn it to Suzanne.
Hi, I'm Suzanne Hanlon, and I am a Business Development Officer at RISLA.
How you doing? I'm Tom Jacobelis. I'm the Director of Technology and Cybersecurity at RISLA.
So at this point, you're probably wondering, what's CHESLA and what's RISLA? As you can see, CHESLA and RISLA are both quasi-public state entities created to help students and families finance the cost of higher education. CHESLA is affiliated with the state of Connecticut and RISLA with the state of Rhode Island. We're both nonprofit, and that means we have your best interest in mind. This dynamic CHESLA-RISLA partnership works with human resources teams to help employers assist employees with student loan debt repayment. We can customize a benefit package based on unique employer needs. As you can see from the next slide, CHESLA has partnered with RISLA to offer a robust program for employers. CHESLA offers its financing programs while RISLA handles the student loan repayment processing. CHESLA products include, as you can see, college planning, financial wellness, and refinancing. And the refinancing might be the most important feature for your staffs who are interested in achieving more cost-effective loan rates and lower monthly payments. CHESLA offers some very attractive refinancing rates. Before we get into the specifics of the employer paydown program, Josh is going to tell us more about the student debt landscape.
Thanks, Jeanette. So just the facts of student loan debt. The cost of college has steadily increased over the last 20 years. Over that time frame, college tuition and fees have more than doubled. The rising cost of college has also outpaced the rate of inflation. As these costs have risen, so has the need for student loans and other forms of financial aid. So let's talk about the stats. There is currently $1.75 trillion in total student loan debt outstanding, including federal and private loans. On average, borrowers owe about $29,000 at the national level. Let's talk about Connecticut. Connecticut is one of the highest debt states with an average owed of $36,000 per borrower. When looking at the age groups in the chart here, unsurprisingly, younger people hold the majority of the student loan debt. However, people carry their education debt well into their middle ages. As you can see here, there is $380 billion in student loan debt, impacting 8.8 million borrowers ages 50 and over. Student loan debt impacts employees of all ages. So why employer student loan repayment? Let's talk about what the employees are saying. 86% of employees will commit to a company for 5 years if the employer helped pay back their student loans. 62% of adults with student loan debt will consider switching employers to receive help in paying off debt. And 3 out of 5 young workers say a higher priority for them is paying off their student loans, not saving for retirement. This is the benefit that employees are seeking, and this is in demand. Suzanne will now discuss a recent survey that RISLA conducted.
Thanks, Josh. RISLA recently sent out a survey to their graduated and current graduating senior loan borrowers, and this slide shows the survey results. So when searching for your current or future employment, do you take into consideration the benefits offered? It was an overwhelmingly yes. Did you know that your current and/or potential employer have the ability to make contributions up to $5,250 annually on your student loans? Very few were aware of this program. Would this benefit, employer student loan repayment assistance, attract you to one company over the other? And that was a definite yes. And if your tax-free payments towards your student loans, would you feel they're making a clear commitment to you and your future financial wellness? And that was 100% yes. These results mirror many other surveys that have been published. Speaking of surveys, if you're uncertain of how many employees would be eligible and take advantage of this financial wellness benefit, RISLA will conduct a survey on your behalf. This helps your organization determine funding, and we do so at no cost to your organization. There's an innovative, highly impactful financial wellness benefit through the CARES Act. It's called Employer Student Loan Repayment Program. It states employers can help employees repay their student loans up to $5,250 per year, and it is a tax-free benefit to the employee. It does run in conjunction with a tuition assistance benefit. So if you are a company that offers tuition assistance and considering employer student loan repayment, employees can receive up to the $5,250 a year in combination for both programs in order for it to be a tax-free benefit. Loans eligible for this benefit include federal subsidized and unsubsidized Stafford loans and private loans. In addition, the benefit is currently in effect through January 1st of 2026. Thank you. And companies nationwide are utilizing this benefit to help a workforce struggling with student loan debt. Also, in most cases, this benefit can be written off by the employer. Josh?
Thanks, Suzanne. So let's talk about the great state of Connecticut benefits offered. If a company pays down any CHESLA loans in repayment, so this would be any in-school student loans or refinance student loans on behalf of its employees, the company may be eligible for a state of Connecticut tax credit. So how do employers qualify for the credit? The employers must employ the qualified employee and be subject to corporate business tax or insurance premium tax. The tax credit is refundable for small businesses as defined in Governor's Bill number 5506. The qualified employees must be residents of Connecticut, be full-time employees, have earned their first bachelor's degree from an institution of higher education in the immediately preceding 5-year period, and not be an owner, member, or partner of a qualified employer, or a family member of an owner, member, partner of a qualified employer. I will now turn it back to Suzanne, who will touch on the data transmission and funding process.
This benefit is fully customizable as employers can determine which employees can receive this benefit and their requirements they must meet in order to receive the benefit. As an example, some companies put in the requirement that an employee must be with them at least 90 days. Payments can be made by employers monthly, quarterly, or annually in an amount that the employer decides on. Payments can go over the $5,250 limit, although your employee will be taxed on the amount over and above the $5,250. We find in most cases, companies contribute between $100 and $200 per payment. Next, the employee has to go through a verification process per IRS code. The employee must show that they are the borrower of the loan, their student loan account number, and who their servicing company is. In addition, the borrower must have attended an eligible Title IV institution, and almost every college and university in the country are Title IV schools. Some trade schools are not Title IV institutions. So federal subsidized and unsubsidized Stafford loans and private loans are eligible for this highly impactful financial wellness benefit. Plus loans, home equity loans, line of credit, and credit cards that were used to pay educational expenses are not eligible for payment. Payments typically are made towards the principal balance and are looked at as an additional payment. For you visual learners, this slide shows the process where RISLA receives funds from the employer and forwards them to the employee's servicing company. Employer student loan repayment makes an impact that matters for a workforce struggling with student loan debt. It reduces the life of the loan and reduces the interest that would otherwise accumulate. Payments made by RISLA on the employer's behalf are sent directly to the servicing company, and the company's intent in most cases is for the payment to be an additional payment towards the principal balance of the loan. We have a calculator on our website listed at the bottom of the slide, and employers and employees can utilize it to determine the impact the employer's contribution makes. Many articles have been written on employer student loan repayment program, and I've listed a few that I felt were informational, and the links to the articles are listed as well. So here we have the roadmap. Are you looking to differentiate yourself over other employers? Consider employer student loan repayment as a financial wellness benefit. Knowledge is power. An employer can contribute up to $5,250 annually towards their employees' student loans, and it is a tax-free benefit. As a Connecticut company, there are state tax incentives to offer this program. Employer student loan repayment can be customized and can be offered to your employees with no minimums or startup costs. And lastly, it is a highly impactful financial wellness benefit that will reduce the life of your employees' loans and the interest that would accumulate. In closing, student loan debt is at approximately $1.75 trillion. Employee benefits could be the key to assist a workforce struggling with student loan debt. Our contact information is on an upcoming slide, and if you have any questions, please feel free to contact us. And now it's demo time. Tom, RISLA's Director of Technology and Cybersecurity, will walk us through the portal, which is utilized to set up and maintain the benefit for employers and their eligible employees.
Hello, how are you doing? Pleasure to see you guys today. So we'll be going through the RISLA Employer Repay portal. The first thing we'll do is go into an employer account. So the portal supports two types of accounts, employers and employees. Employers go into the system to manage the employees, obviously, and the employees go into the system to manage their loan information. So the first big thing you'll notice when you first log in is where is the amounts and information as far as like notifications that are required for you to notice. So the first thing you'll notice, is obviously how much money is currently approved in the system or unapproved, and then the amount for the fees. As is mentioned previously, it's only $4 per transaction. So the way we determine that is basically if you have 10 employees in the system and they are getting a disbursement once a month, it'll cost you $40 a month on top of the disbursement costs. So if you're paying $200 a month to each employee, it'd be the $200 plus the $4 for the employee's transaction. Quickly, you'll see some information about where employees are in their registration process. So as was kind of mentioned, as far as what RISLA handles a lot of the management of the employees, but the main thing is making sure that they have a loan selected that is in fact a student loan that they are the beneficiary of. So you'll see here a list of employees that you've uploaded into the system that are pending RISLA approval. And this, they have two basically things we're waiting on them for, which is that they've uploaded loan information. And then the second thing is that they've uploaded us a billing statement. So we only require a billing statement for the first time that they select a loan. It's not like an ongoing thing. It's just to, for verification purposes that, they're the beneficiary and that it's in fact a student loan. Down further, you'll see where all the improved employees are and what their status is as far as their contribution and their next payment date and the number of loans they have selected. This is where you'd come in to check and verify that all these employees still currently work for you and then submit them for payment into the system. The other thing you can come in here and do is edit the payment schedule. So this is kind of where you would manage what months you want to make payments for. So as Suzanne mentioned earlier, you can do monthly, you can do quarterly, or you could do once a year. I mean, whatever you really want to do, you can just select what months you want to make those changes for. So This is kind of just a default demo account. This is not necessarily the way anything needs to be set up, but just kind of what we find as common across the board. So the next big thing you'll notice, so as I go through this is like a kind of a day in the life of your first time coming into the system. So the next main thing you'd probably be dealing with is registering employees. So there's a couple of different ways to do it. If you're a small company, you only have like a couple of employees, or you just hire one person, you can come in and register just one employee manually. We don't ask for much, just their email, their employee ID, and the tier in which they will be part of. So the system supports different tiers. And basically how we normally see this used is different contribution amounts based on years of service. So, the first year an employee might only get $1,000. The second year they may get $2,000, and so on and so forth. But you could do things like we have clients who do like nurses versus doctors or management or something like that. So there's a bunch of different options you can do with that. We also support just uploading us a big CSV file, like any eligibility file you would have for like open enrollment or enrollment in other HR benefits. So basically you could just, make a CSV to which we have a template for of all that same information and upload it into the system. It doesn't have to be through this way. We also support SFTP. You can email it to us. I mean, whatever way kind of works, but this is the easiest way that most people tend to use. It's just upload it to the CSV file and it'll just determine who's eligible. And from there, the employees will get an email asking them to register for the system. You can have a couple of settings as far as that email that goes out. We don't really send too many emails. We don't want to obviously annoy your employees. So the main thing here that you can come in and change is the different emails that do go out, and one of them being the registration email. You can come in here and edit the text to say anything special you want, but we just, some pertinent information is left that you can't change. You can also change co-branding, so you can upload your own logo that replaces ours. And, that way you guys get the credit you deserve for implementing this benefit to your employees. So that's just like, one of the small settings you can change kind of easily. But anyways, the employees will receive the registration email. The only other email we really send out is about payments. We just ask that the employee verify that the payment went through successfully in the system. We do see servicers sometimes get changed and stuff like that, so we just want to make sure that ends up working correctly. So from here, I'll kind of show you the employee side of it. There really isn't much as far as what the system requires you to do and day-to-day management of the system, because it's meant to be just incredibly simple. We know HR people are super busy, so we want to keep as little extra overhead on this as needed. So basically, you upload the employees, make sure that they're still, employed there, and the rest of the system will kind of manage itself. And the same really kind of goes for the employees. So the employees will come into the system when they first, get the email asking them to register. And the first thing they'll be asked to do is they'll enter a setup wizard. From here, they can upload their loan information, and we have a couple of different ways to handle that. The main way people use is through our third-party integration to Plaid, which allows a person to just select their loan servicer. Let's say they have Great Lakes, and then they can put in their credentials, and it'll pull all the pertinent information that's required, and with just no additional effort on their part. Aside from uploading the billing statement. The other method, if you're like me, somebody mentioned I am the head of cybersecurity. I don't want to trust a third party with my credentials to my bank. You can come in here, select which servicer you have, and upload, the pertinent information. I mean, we don't really ask for much. This is easily found on a billing statement. Once they do that and the loans are all entered into the system, they're only really required to enter one. But, we do see reasons why they might upload additional ones, such as if one's about to be paid off, they may want to have it roll over to another loan without them having to log into the system. So it's nice to have two already set up. The second thing is we do see some people with several loans that they want to split the disbursement on that they get from their employer. across multiple loans. So like maybe you have 3 loans and each one's a minimum required payment of $100 and your employer is providing $500. You might want to break that up to get all 3, maybe 2 paid off and 1, some extra additional or something like that. So you can do stuff like that. So here you can see the loans that are already uploaded. When one of the loans is selected, it'll ask the employee to upload a billing statement. So that's, we accept a bunch of different stuff, but it's as easy as just choosing a file off of your desktop. But, you can do PDF, you can send us a screenshot, you can send us, a picture from your phone of the billing statement, whatever it is, just as long as it has the information we need, which is the account number, the servicer, and your name. And then once it's uploaded into the system and approved by us, that's the last thing you have to do. You won't have to come in monthly or anything like that. It's just once that loan's approved, we can make payments for it indefinitely until it's paid off. A couple other additional things that the employees get access to is a calculator. I think this was brought up in one of the slides. This will allow them to, just calculate how much your contribution is impacting their loan amount. So, it'll do things like estimate the life of the loan. This is just based on an employer contribution of $100 per month, and then how much interest paid is getting reduced. So, it says with your contribution. So this just really shows the employee how much of an impact the benefit has for them personally. The other thing they get access to is a bunch of resources for Connecticut. These resources, I think they already went over. So, but you can come in here and they'll get a bunch of different information about Connecticut's refi and financial literacy and education loans. So once they're kind of all set up, the day-to-day stuff is managed. For them, they pretty much don't have to come back into the system unless something changes or a loan is paid off. So it should be pretty hands-off at that point. So the only thing, and that's when you would see these employees here at the bottom as approved. They upload us that document, we'll approve them. And from there, you just come in and submit for payment when you want to. You can set this up to automatically do payments, but that's up to you. There's a bunch of different options as far as this is concerned. Usually how the payments work is we do the payment on your behalf, and then we invoice you and you just, pay us back by the end of the month or something like that. That's kind of it. I'll hand it back over to Suzanne and let her take control.
So thanks for the great demo, Tom. And before we wrap up, we wanted to take a few questions. So let's get started with the questions.
First question is there a minimum participation requirement for this service?
No, there is no required minimum participation number or minimum contribution.
And what is the industry standard contribution?
So RISLA will help your organization tailor a program that fits your needs best. Contributions range from small monthly payments, often $50 to $200 a month, or larger quarterly or yearly sums. Programs can be further customized to increase year after year as a retention incentive or be prorated based on hours worked.
And when do payments go out?
Yep. So payments are dispersed on the 20th of every month or the next business day. We ask that all payments are approved by the 18th of the month or set up for auto approvals in the settings tab in the portal to avoid missing a disbursement. We will also send you email reminders when it's time to approve payments.
Okay, and how do I get started, and what are the steps we need to take to get a program up and running?
Yep. So we will work with your human resources team to identify employees with student loan debt and customize a benefit package based on your unique needs. Customization options include determining eligibility or who receives the benefit, contribution amount, meaning the dollar amount offered per employee, and contribution frequency, monthly, quarterly, or yearly. Implementation is quick, easy, with no startup costs at all. There are no minimums to meet, and only cost for this program is $4 per contribution disbursement per employee. In other words, we help you upload employee enrollment files that only need to include employees' email and employee ID. We activate eligible employees in our online portal. We manage the information and contributions. You approve employees enrolled in the program for the contributions, and we will disperse and confirm payments to employee accounts based on your requested frequency.
So that concludes today's webinar, and thank you so much for joining us to learn more about the CHESLA RISLA Employer Student Loan Repayment Program. Please contact us with your follow-up questions or to get our employee survey or to receive a more detailed demo. Thank you.